We are, though, in this transitionary period. Very obvious to us what's happening, even more obvious to you as somebody who can read the market like tea leaves and spot everything that's happening. I think this is one of the really important things for people who haven't fully understood what's happening for the nature of money right now, or haven't fully considered, let's say, all digital money, not just Bitcoin, the advent of CBDCs. I don't think we should spend too long on the history, because I'd encourage people to go and read it and read the other articles that have done. But can you give like a brief summary of how we've got to where we are, the different transitions, and then we'll cover specifically what's happening with money right now?
Sure. So through that lens, money is technology.
Yeah.
And as technology changes, our money changes. And so we can put it in three buckets: commodity money, fiat money, and digital money, right? That is kind of one way to kind of just simplify it. And so commodity money was the reality for thousands of years, where you're trying to figure out, if someone has apples and they farm apples, they want to turn that into products and services. Rather than try to line up all these people that need apples, she can find a third asset, something that everybody wants, and sell her apples for that, and then being able to use that as her savings and her expenditure in the future, right? And so you need something that is, going back to the properties we discussed, that is liquid, fungible, everybody wants it, it stores its value pretty well, it's easy to move around, you can transfer a decent amount of value with a small amount of space and weight, and so various commodities kind of serve that role. And the risk there is that if technology improves, you can make a lot more of those commodities, and so you can threaten the value long term of those commodities. And so, kind of like if you look at history, you kind of go up the scale to all these different, you can use salt as money, you can use coconuts as money, you can use livestock as money, you can use copper as money. And as technology improved, and as cultures with different levels of technology kind of interface with each other, the harder monies would win out over these ones that technology can devalue. And eventually you wound up with gold and silver, and then really it was gold that kind of came out on top in the end. And so that's kind of the history of commodity monies. And it's because gold has like an inherent kind of a difficulty adjustment built in. So as time progressed, we got a lot of the easy gold deposits, and as our technology improved, we could access harder gold deposits, but it's increasingly hard to get that gold. And so actually, almost no matter how much human technology improves, we've had trouble making more than 2% more gold per year, right? And that's kind of the upper limit, except for very brief moments where we find a new continent or some sort of massive step change. Other than rare moments like that, we don't really know how to make more gold quickly. And so that's why it's kind of stood the test of time compared to virtually every other commodity in terms of being good long-term savings. But because the downside is portability and auditability, it eventually got very centralized. So it would get collected in banks and claimed would be made on the gold. And then it got increasingly collected into central banks, where not even banks held the gold anymore. And so you had a complete detachment from what people used as medium of exchange, partially for convenience and partially due to legal decree. Governments had an interest in kind of collecting the gold, while people, would be expected to use the papers. And then, but the risk there is that you can just, with a stroke of a pen on midnight one day, just sever the connection between those papers and the gold. And that's what happened in countries around the world multiple times until it happened permanently in 1971. And so we've been in this era of fiat currency where it's almost like an artificial commodity. So for example, the rate of, the stock to flow ratio, so how much money exists versus how much is created in a year, is higher than most commodities. So that's important as a money. It's lower than gold and silver, but it's higher than, say, oil or copper, things like that. And so you have kind of a workable money. Its volatility is managed by the government and the central bank. There's various checks and balances for who can create money, and kind of the number of people that have to sign off on new money creation, at least in kind of these developed markets. But the downside is longer term. Your monetary inflation rate is 7%, 8%, 10%, 15%, and of course in many countries far higher. And the interest rates rarely keep up with that long term. So you basically get diluted as you hold stake in that network. We can call it a network. You keep your percentage of that network keeps getting diluted over time by holding it. In addition, it still has shortcomings in terms of auditability, right? So for example, in there's a lot of dollars held offshore, and then those get levered. But those still represent claims essentially for U.S. assets. And there's actually, it's a very opaque market because it does not have great auditability. And also obviously paper money can be counterfeited. And so it has various imperfections. And so that's been something that's been kind of plaguing humanity for a while, I would say, is that money is this kind of political thing and devalues. And then especially for people living in emerging markets, it becomes, you have like a hyperinflation event once a generation at least, right? And so that happens in developed markets around the world, developing countries around the world, I mean. And so it's bad enough in developed markets, and it's 10 times worse as you go down the spectrum to if you go towards they call it the periphery of the financial system, people that, countries that they're not near the core of the whole money creation process. They're not the Fed, they're not the ECB, they're not the Bank of Japan. They're in these periphery markets, and they have all the volatility of the system. So the developed world kind of pushes the volatility out to them, and they get all the downside of the system and none of the upsides. And now, first you had the creation of Bitcoin, and then you had various entities study that and say, okay, can we do this to fiat? Can we put fiat on the blockchain? Then you get stable coins. Then you get governments look at that and say, hey, can we just make stable coins like issued by the government? Can we make digital money? Can we improve our banking rails? And people often say that the dollar's already digital. The fiat money's already digital. Your money's just a ledger in a bank mainframe, and that's partially true. But the digital change adds a lot of new variables for how much they can track it, how much they can control it, how much they can freeze it, how much automated it can be, right? So if you're sending money from entity to entity, it can be much more automated if it's digitally native compared to those old bank rails. And so I think one way or another, we're going to this future where due to the application of technology, money is increasingly digital, which makes it more verifiable, easier to transfer, things like that. But of course, the huge risk there is that it increases surveillance and control capabilities, which, going back to, living in different countries, that can mean very different things depending on what country you're in. A CBDC in Norway could be very different from a CBDC in China, for example, what the actual practical implications mean. But either way, it kind of puts people at the whim of the entities that control that money. And Bitcoin is basically, I would say, the creation of commodity money in digital form. So they made something that requires work to produce, which is unlike the fiat currency system and unlike most of these other digital assets. It actually goes back to the days of commodity money, except it improves on that because it makes it more divisible, more verifiable, and more portable. And so we're kind of in this world now where you have digital bearer assets like Bitcoin being the most, the most immutable, the most money-like out of all of them, commodity money, hard money. And then you have various imitators. And then you have stable coins, which are basically fiat currency in digital form. And then you have, nationalized stable coins, which are centralized CBDCs, where the central bank issues the money and has complete control over how it's used.
Digitized commodity money. That's very cool. Never had it explained like that. Even
Satoshi explained like that once.
Really?
He talked about how he's like, imagine a metal that is boring gray in color, can't be used for a lot of things, but it's as rare as gold, but that has one unique property that you can send it over a communications channel. And that's kind of that was one way he kind of helped people think about what Bitcoin is. And he's like, if for any reason this kind of weird commodity became valuable if it had any sort of value, it could be a useful type of money because you could send it to people and they could either spend it or they could convert it to something else and then spend it there. And so that's one of the ways he conceptualized it. So even he thought of it as kind of a digital commodity money.
Out of control of government. I put the Hayek quote in here. I've actually seen him. I've seen the YouTube clip. I'm going to read it for people. I don't believe we shall ever have a good money again before we take the thing out of the hands of government. That is, we can't take them violently out of the hands of government. All we can do is by some sly roundabout way introduce something they can't stop. I mean, that's an incredible quote to read now.
Yeah, because it's Bitcoin before Bitcoin existed. He was the first Bitcoiner.
Yeah.
And it kind of translate that. So for example, commodities money is dictated by nature, right? So nature and our technology against nature determines how much of it we can create and what its properties are. Fiat currency is something that is in the hands of the government. They can determine essentially how much there is, who, what are the rules about how to use it. And the invention of Bitcoin represents a way to take all the properties of commodity money, or at least most of the properties, and then put them in digital form. And so you have something that's proof of work. So you have to expend real world resources to create it. And then, among all the different blockchains out there, Bitcoin's the one that it actually is decentralized and relatively immutable. It's the one that's the closest to representing an actual commodity rather than an equity security, a network that requires kind of ongoing governance and kind of a centralized hub, is the closest thing we have in digital form to a commodity money.